talk about some of the strategies that we use in-house in our trading team. Just wanted to show you in terms of the simple way to set up, as well as what are the best ways you can get started. This particular setups I personally use for years, so that's why I thought it's better than me presenting this strategy than anybody, because I personally use this strategy for years, and also I tweaked it over the period of time as an I see fit. But now I think it's works perfectly well for me. That's why in terms of I put together some kind of explanation, little bit of rules that you can follow, some of the do's and don'ts. That way you can get started with a kind of simple rule set. I would like to start with how many of you have supply and demand indicator already from BuySide Global, or doesn't matter for any other company, because supply and demand is not just unique our algorithm, it's industry specific. So how many of you have access to supply and demand, or like know how supply and demand? I know some traders don't use indicators, they try to draw on their own supply and demand, but still it's the same strategy, it doesn't matter. I just want to know the audience, how many of you already have that kind of strategy? That's perfect. Then have it, some people have it, some people don't. Okay, all right, so let's get started. I will going to walk through a little bit about the what is supply and demand strategy, how to look for, and then I'm also going to give you two simple setups that I use almost every single day. I won't say every single day, because for me, if there is not an opportunity, I won't trade. I won't force myself to trade. But if there is one setup I rely on every single day, that's the first setup that I'm going to go through today. Let's start with the compliance requirements. Whatever we are going to go through, that is, it's not anything, we don't, please understand that CFTC rule 4.1, everything is based on hypothetical simulator performance. Everything is based on past result. Even when I talk about my experience, I'm talking about based on my past experience. Nothing is certain in the future. Please go through there quickly about trading is risky. Everything hypothetical simulator performance does not guarantee anything in future. In ultimately, you could lose money. There is no guarantee in this trading strategies. While I'll try to answer most of the questions, if you have anything, need a clarity, or you want me to expand a little bit more, you didn't understand few things, or you want me to say it a little bit, if you want me to repeat few things, please be active in the comments or question section, so I'll be keep on monitoring it. But if I'm not able to answer, your questions today during the session, please email us at info@buysideglobal.com, or you can call us during the business hours, New York market hours. During weekdays, we'll be able to take the call. But best way is always email us. Even if you're not able to respond immediately, we'll respond as soon as possible. Please take a screenshot or something so that you guys know how to contact us during any time. All right, so let's start with the agenda of what we have today. We are going to go through in terms of like what supply section, how we use, how we integrate with the supply and demand. Most particularly, we are going to focus on something repeatable behavior happens time and time again, because that's a full foundation of the technical analysis. And also, I'm going to put together some kind of rules in terms of what to do, what not to do, what to look for, how to enter, how to manage. Simple rules. I will walk you through those things today, and I'm going to give you two simple setups that I'm going. Let me tell you one tip. Supply and demand is using supply and demand. There is so many ways to trade. That's why I don't want to say like there is only one way. But we're going to go through the two setups that we can start, easy to understand, easy to practice, to start with. Once you master this basic setup, then you can always add more and more different ways. But let's start with two. And once I did the little bit of explanation, I'm going to open up my chart. I'm going to go through live chart. I'm going to show you what to look for in a real chart. I'm going to go through past 1 week. I think the past 1 week is a great week. The reason is that the last week we had a choppy day. We had a uh, trending day, moving day, everything. We had a full range of market movements happened in last week. So there is no better week to analyze this strategy than the past week. You know, the Monday how it opens, Tuesday was a moving day, Friday is like consolidation day. But I'm going to go through how this strategy is so effective on all different kind of market structures. Of course, for every webinar, we finish with the amazing offer so that you guys not only here to learn, also and get started in best possible way. Okay, again, please be active. If you have any questions, that's something I can help, something you don't understand, you want me to repeat, please enter in the question section. I will try to answer as much as possible. Also, sometimes I get questions outside the agenda today because some other product, some other system that we have. Unfortunately, I'm not going to go into those. I'm going to focus on today's agenda, today's strategy, today's supply and demand. That's it. Anything other than this particular agenda, uh, I'm going to ignore. But please email us. We'll get the answers for that, sure. Okay. Before I get into supply and demand, I know this is every day trader knows about this one, but I wanted to stress again and again on one thing. If you Google like what is technical analysis, there is so many ways of definitions and then there. But for me, my simple way, the way I use, I understand what worked for me is that using the historical data, we look for something pattern that's repeatable again and again in terms of what are the patterns, what are the behavior, more than pattern, I'll say behavior, what are the price behavior that happened in the past that's repeating consistently over the period of time. That way, I can expect it's going to happen again. If it happens again, I know how it's going to behave, how I can enter the trade, how I can exploit the behavior, because we saw the pattern same way happened in the past so many times, how it reacted, how it happened, so that we know when it happened again, how we can trade it. That's a whole fundamental analysis for technical analysis. We look at the past behavior, we know when this happens, when A happens, B happens, and C happens. Oh, now I know when this happens again, I know when to enter, when to exit, how to manage my trade. As simple as that's what technical analysis from my mind. Okay. So in that context, I'm going to show you the same thing in terms of what we see in terms of the behavior we saw in the, when I say I'm going to open up the chart analysis path for the past 1 week, it's the same thing. We're going to show you how this particular behavior repeating again and again. Going to show you the proof in the last 1 week. Once you see the behavior is happening again and again, that means you can expect the behavior patterns going forward, okay, to Monday next week, so that you can start visualizing and then start anticipating. Once you start anticipating the moves, you start seeing it again and again. After some point, trading is getting easier. One thing I want to take away is that try to understand what pattern happened, how it happened, and then monitor that pattern, how it's happening on coming Monday or Tuesday. Is repeating again and again. Once you start the pattern repeating again and again, that'll be the wow moment in terms of I know if this pattern behave, if it happens, I know what's going to happen next. That means once you have the kind of visualizing what's going to happen next, that's like a wow moment to have how you can take the action next. And also, once I show you the pattern, behavior, everything, I'm going to also show you, okay, how to use that opportunity to trade it. So that's the whole agenda. I'm going to show you the pattern and behavior that's repeating, and then I'm going to show you the start. I know some of people want to get to the chart right away. I'm not going to do it. Please be patient. I need to, some of the stuff is really boring. I'm going to repeat, but it is very important. I need to finish explaining the foundation before getting to the chart. Okay, I have shown you this particular market movement, how the market moves so many times, but understand that market move does not move in a straight line. Always there is only two ranges. Okay, the consolidation layer and then the movement. Market moves and then stays in the consolidation. Market moves and stays in consolidations. That's the whole structure you need to understand. If we understand this particular behavior, then everything is going to fall in place. Okay, particularly, I'm not sure why. Can you see, guys, see my mouse movement where I'm pointing out? All right, so okay, God, thank you so much. I wanted to focus on this consolidation layer because this is what the key we are gonna find the behavior, how and when this consolidation region forms. Using supply and demand, this is what we're gonna scan and find. When the price gets consolidated, and then we're gonna, once we find this behavior in the market, I'm gonna show you proof how it forms, what is a boundaries forming, and then I'm going to show you how to trade it. So this is what we are going to focus on today, how to find this consolidation. If you look at the market, always it forms consolidations, moves, find a different consolidation, moves, different consolidation, it's keep on moving. So the whole behavior we're going to focus on how and what is the best way to fast as possible to find this consolidation region. How many of you read this book? How many of you read this book? It says how I made the $2 million in the stock market. This book is like in 1960s. The reason I'm telling you is that because I've been using this strategy for years, but I read this book and only 2 months ago. I read this book 2 months ago. The one of the fascinating part is this guy using the strategy that I've been trading on 1960 itself. If you look at this particular guy, I don't want to get into the book, but once I finish the strategy, please look for the book in terms of read the book, then you'll see how it's the same strategy used it like 1960s and still valid now. Consolidations, look for the rules exact same way. I did tweak my strategy after reading the book. I'll tell you that way. Okay. Okay, so some people wanted to see the charts. Let's start with how you can see. Market, the strategy is purely based on price action. In terms of the price action, we want to see anytime the market consolidates, we want to see the top and bottom boundary. In this screen right now, I took a screenshot of our supply and demand indicator. There is a lot of zones created. In terms of the bottom, the green bar represents the demand zone, where the price, anytime the price comes back to that region, it gets pushing to the opposite side. Same way you can see on the supply zone. In terms of anytime the price goes there, it got rejected and then pushing down. Price tend to move between those layers. I wanted to ignore anything small. I wanted to focus on only where the zones not being penetrated, and then in this case the top supply and then the bottom demand is what the boundary. In this case, the price gets stays in there. Once you can see, once it's broken out of those, the price moves from there. This is what the whole fundamental behavior we're going to focus today in terms of how we can find this consolidation region, how to find the top boundary and bottom boundary, and then we're gonna wait till it breaks out. Not only that, I'm going to give you some of the my tweaks which I'm using right now to avoid the fake breakouts, because that is the most frustrating part in the breakout strategies. I have heard so many times people, I entered on breakout, but market came back and then entered this consolidation region again. That's why I tweaked a little bit, and then now we have much better strategy even to avoid the false breakouts, fake breakouts, those things. That's why it took like overall time. Okay, I don't think anything we have questions here. Okay, one of the behavior that we're going to focus on, once I told in terms of we have the top side resistance and the bottom support. Market is going to, I wanted to wait till the market consolidates. Once it breaks out, the risk support, the supply becomes demand. Okay, this is a key area. Once it's become demand, price is not gonna, most of the time is not gonna go down. That means this is going to be the base demand, and then the top is going to be supply. This is the rule that we're going to use today in charts and trading. That means we're going to wait till the breakout. Don't trade immediately on the breakout. Wait for the confirmation that the supply became the demand. I'll show you in the charts a little bit. Okay, so here's the high level, but I will go through the in live charts pretty soon. But please understand that simple rules is find the clear consolidation range. Wait till you see the consolidation range clear, forming the top and bottom. Wait for the breakout from the range. To avoid false breakout, I'm going to show you in terms of we need to wait for the opposite zone forms. Sometimes you can't understand by the bullet points. When I show in the chart, that you'll understand much more in better clarity. Okay, one is entering the trade, other one is the stop loss. The supply and demand strategy is so powerful because it's going to give you most reliable, trustable trade management, because it's going to tell you exactly where you should put your stop loss, where you should exit your trade if it's not working. And that's the most fascinating part in the strategy, but I'm going to go through that. Not only for the trading, enter the trade, how you can manage when the market moves, you want to move your stop loss, everything. So let me show you a little bit there. Okay, so this is from the I think from the last week. In this case, again, you can see uh, this particular, all the red zones are the supply, green is the demand. By visually looking at it, people can't make anything out of. I see a lot of boxes, I see like everywhere, but I don't know clearly when to enter, where to enter. So, but if you look through, like I told you, you need to look for the clear boundary. I drew a little bit of indication there. In this case, I know this is the top and then the bottom is forming, price is bouncing in between. When the price broke out on this particular supply, this is really the strategy, right? So this is where we're going to enter. But one thing I wanted to part of the rule I told you in terms of not every breakout is tradable. Not every breakout is tradable. The reason is that that's why we say in terms of the supply need to become demand. Can you see it right here? The same price range where we had the supply for such a long time, now we have the demand formed, the base formed. This is the confirmation you need to look for. Do not trade until we see this one. At the same time, look down below. The prices touched almost, it broken below, went down. If you entered the short here, you would have failed. The reason why we should not enter the trade, because if you wanted to enter the short, this demand, you should have the red supply here. If you don't have the red supply here, another demand forming, do not enter. Wait till the confirmation. This is why I'm telling you in terms of the supply need to become demand, or the demand need to become supply to take the breakout trade. That's very important to avoid the false breakouts. Again, find the top boundary and bottom boundary, find the price ranges. Once it breaks out, make sure you have the same price range where the supply was held for a long time. You have the demand. That means that's the base. So now we can enter. Okay. I want to show you one more product that is very much important. When we say the price action, I absolutely want to trade on price action. I don't want to trade on time basis. What do I mean by that? So I'm looking for consolidation region. I'm looking for the breakout. But when I look through the 5 minutes or 2 minutes, any minute chart is the chart between time versus price. time versus price. But if I take away the time alone completely, if you look at here, right here, this is our custom chart BSC Pro Boss. We take away the time in terms of it is based on purely price action. In this case, if the price, let's say the price stays in one bar for 30 minutes on the same range, keep on there, the bar will stay the same thing. It takes away the time completely away. Okay, so that's why I love to trade in the custom chart, where we don't want to look at the chart based on time, only look at the price action. Okay, let's look at this quickly. How many of you can tell me how many trading opportunities here in this screen based on what I just described? Based on what I just described, how many of you can tell me how many trade opportunities are here on this? This is Friday, by the way. This is Friday, last week, 2 days ago, the chart. Just the difference is I'm plotting the price on our custom chart Pro Bars, okay, on the Pro Bars, where I don't want to see the chart based on time. I don't care about the time. If the price stays in the same, I just want to see the price movement between the range and then like those things. So Pro Boss is the best way to take away the time, look at purely on price action. Okay, so I started getting answers. When I say 5, what is the 5? Can you tell me in terms of the time here, bottom? Give me based on, let's say if you see a price number like 846, near 846 is a entry, long, something like that. How many of you can tell based on the price action that we talked about, how many opportunities we see? I'm going to show you exactly, but I want to see how many of you can figure that out. Oh, you can't find the time. Okay, I'm sorry. Anyway, so let me move on. So now this is the raw chart. When you're looking at first time, I'm pretty sure you're not going to figure it out. You don't have the clarity, but you start looking at the charts again and again. Once I explain it, you'll see more. Okay, so now let's look at the way I see it. Okay, in terms of same chart. Look at the same chart now. Do you see the supply is like extended right there until here? Demand is extending. It is from almost like 4 hours. This is like 4 hours. Okay, 4 hours price is bouncing between those things, and then the clear boundary is forming right there. What happens when the price breaks out? Okay, price breaks out, and also the red supply stopped, and then the green demand is formed. Look at that. So this is exactly I'm talking about. Don't just trade based on breakout, because look at here, price broke out here. If you entered here, you would have lost the trade. Why? Because the demand, it did not come another supply, it became another demand. That means they just moved down. The boundary moved, but it's not a trade. That's why I say you should have opposite. When you have a breakout from the demand, you should see a supply forming. When you have the breakout from the supply, you should see the demand forming. That's the most critical part. Okay, so in this case, the price was ranging. We just need to wait. But even though this is pre-market, I'm in Chicago, by the way. When I say like a market open, for me, market opens by 8:30 right here. Okay, right here. Market consolidating here, but once it broke out here, supply becomes demand. This is my trade entry. This is my trade entry. And then most important point, my stop loss is always below my demand zone, not immediately below this demand zone. I tend to keep my buffer like 3 to 4 ticks. The reason is that for the same reason here. Sometimes there will be a fake breakout, but it go back in. If I have my stop loss right in the base, I get stopped out. I don't want to have, but I always see 3 to 4 ticks below my demand. If I enter the trade, I enter the trade right here, my stop loss is 4 ticks below, and then I can take a run. Okay, this is exactly my setup. Now look at the same rule. Look at after like a 11:45, the price bounced and then stayed in that region, and then stayed here and broke out here. Supply became demand, and then market moves there. Okay, so this is exactly I want you to see. How many? I know that we talk about here. I think I want to go back. I know some people don't want to say it, but I want to show. This is what I'm talking about. You see that I told you this is the most important behavior you need to learn to practice, learn to master, know how when the accumulation firms break out and then form another accumulation, and then like this moves, market moves in the same behavior every single day. Okay, if you know how to identify this, you can trade almost every single day, no matter what. It's a choppy day or a moving day, anything. Okay, so look at this, remember this. Let me go to the Friday's chart again. Okay, now tell me, does it look like the same that we just saw the behavior? Market moves in a consolidation, breaks out, and then find a different place to consolidate, moves out, find a different place to consolidate, moves out. This is what the market does. This is exactly what market does. If you find a way to find exactly where it should expect you to break out, you know where to put your stop loss, and then um, take your trade. Same thing, look at this. This supply became demand, went up. In this case, it opposite happened. The demand became supply. Okay, it, even though if you look at this one, almost the reason I love the pro boss compared to minute charts, um, this even though it looks like small range, but it is almost 2 hours. 2 hours, it is between this range, this particular range right here. But since I took the time away, I'm looking purely on price action. Price broke out again from here, and then it forms a new region. This is exactly the pattern uh, you need to follow. Somebody's asking, yep, what you sometimes use 10, you can use 10 lines, it doesn't matter. But for me, that's a different strategy. Every strategy works. Okay, again, there are so many strategies, everything. I think we are going to, as long as you know how to find the behavior, how to identify the entry opportunity, how to find the stop loss, everything doesn't matter. For me, in this case, you don't need a trend line, but I use trend line, you know, when the market, I'm going to show you on Tuesday. The Tuesday market moved differently. Market was going down rapidly. The same behavior, same strategy works absolutely fine on any day. Any questions so far? Anything that I did say you're not able to understand, you want me to expand more? Again, let me go back to the rules that we talked about. Okay, um, find a clear consolidation range, wait till the breakout range. To avoid false out, use opposite zone strategy. What do I mean by that? When you're breaking out from supply, wait till the demand forms. When you're breaking out from demand, wait till the supply forms. Make sure you follow that rule. Otherwise, you're going to enter the trade on a false breakout. You're going to get stopped out. Okay. Know your stop loss. I just told you in terms of if it is going long, it should be 4 ticks below the demand. If you're going short, 4 ticks above the supply. Know your stop loss. Okay. What are the data series just setting that you have? I'm going to show you the live chart. I don't have the screen here, but I'm going to, once I open the live chart, I'm going to show you the data series settings of the Pro Boss. Okay. Again, in a nutshell, this is what I'm talking about. In terms of find the range, wait till breakout. When the supply becomes demand, that's when is entry opportunity. Make sure you have the, in this case, this is from our indicator, our setting chart. This is Pro Boss, our product, the charting product. And then the indicator is like the one draws the supply and demand, the supply and demand indicator. In this case, the supply was broken through and the green demand forms. Exactly the same behavior in the charting. This is the most important rule. Do not enter the trade without this. But there are cases you need to trade without this particular strategy. But I don't want to confuse you now, because there are so many ways to trade. So many ways to trade using supply and demand. I have in my sleeves at least 7 that I use. But I'm not. If I tell you everything now, you're gonna get confused. You're not gonna use any one of them. That's why, if you want to start with one, this is what it is, because you see this particular strategy happen in the market every single day. Okay, every single day. Okay, I think we'll come back to this one, but let me go back to the chart. I think let me go back to the chart a little bit to show you in terms of Okay, can you see my chart? This is a I have Ninja just to show in terms of I use two chart setup. I have in my screen I have just two charts. One with the 5 minute 5 minute I trade on ES. It doesn't mean this same strategy works for NQ, CL, ES. Doesn't really matter. You can use it on anything. If you want to show, send me an email. If you wanted to explain that in a different instrument, I can happy to do it. But for me, I'm showing here because I trade ES. I had two charts set up always. I have one 5 minute chart. I need to know the time based, and then I have the trading chart, which is a pro bar chart. So in this case, same way. Now, who can tell me where is the opportunity to trade? We just talked about it. I know I'm going to actually go to the pro bars for much more better clarity, the way I can trade. But in this case, who can tell me where to enter in this day? This is a Friday's data. Who can tell me that? Somebody can look at the chart, tell me what are the trading opportunities right here based on what we just described. Yeah. So in this case, you can see the prices like a form consolidations between those region. It broke out here. Again, another broke out here in this case. But in this case, you can see the demand. There's no demand is broken, but there's no supply immediately. You get a little bit confused because it's time based. It is time based, right? I think even in this case, there was a consolidation happened here, broke out, but there's no supply here. For me, that's why it's good to look at the time based chart, but it's you need a pure price action chart to trade. Okay, let me show you the second chart that I have. I use 5 minute chart also. Okay, so let me show you the second chart where it's pro bars chart. Okay, I know it's noisy. Please bear with me. Now look at this one in terms of same chart from the market opens at 8:30 right here. Okay, market opens 8:30. From here, can you see the market is like, okay, I'm not sure whether I can draw a rectangle. Let me see. I can draw a rectangle. Okay, do you see this? Okay, this is Friday's data. You can see the market like consolidated here and there. Once the bottom bound is broken, the supply form, this is where I take the trade. This is where I take the trade in terms of it's short right here. One other fascinating point. I told you, when you enter the short trade, your stop loss is 4 ticks above the supply, right? That means 4 ticks above. Look at the price. Even though you enter the short trade, price came back, could not go above. Price went down, came back again. Look at, did not go up, and then it broke out. Do you see how powerful the stop loss also on the supply and demand? It knows exactly where you should put your stop loss. Not only it gives a confirmation, it's going to give you exactly where you should put your stop loss. In this case, this is one region. Let's do one more. Okay, and then next one. Okay, do you see this in terms of price? This is almost from 10:30 to 12 noon. Price was consolidating here, but once the demand becomes supply, another trade opportunity happens. Okay, this is exactly the way you look at the market in terms of it. Okay, so in terms of find the consolidations, wait till the bottom supply becomes demand becomes supply, or the opposite way. Okay, now the next one. Why is the next one? You can do it all day in terms of this market, how the market behaves. Okay, and then okay, market closed like this. Market closed in a range. I didn't take an opportunity, but this is exactly how it happens. Okay, and then let's look at. Okay, in this case, who can find here? This is, I think it's a Thursday, 26th, September 26th. Okay, look at here in terms of market opened right here, 8:30. Okay, again, you can find the same pattern again and again. The market will consolidate. Okay, market will consolidate. Once the demand becomes supply, you can enter the chart. Okay, enter the chart in terms of market moves up. Again, you'll find the consolidation ranges here. Any questions so far? Anything that you guys want me to a little bit expand a little bit on the strategy that the first strategy that I'm talking about? You need to see the day on Friday. Sorry, Tuesday. I'm gonna look at just one day. I'm gonna go back to Tuesday. Okay. So I think I was looking at Tuesday. In terms of, you can see the boundaries. As long as you find the boundaries, that is what the most important point. Okay, so let's go back to Monday. Where's the market opens here? 8:30. I'm showing actually only one indicator, but I use um, one more very important indicator on the same trading chart, which is BSG levels. Let me tell you why and how it differs. Okay, I'm going to change a little bit my indicator, the color. Okay, BSG level also based on supply and demand, but the biggest difference is supply and demand indicator, it prints your zone as and when the price moves. It's a real time. It's going to print the zone as and when times moves. But BSG level is predictive algorithm. When the market opens 8:30, when the market is right here, it's going to give me the predicted what we are expecting based on. It's a predictive algorithm. It's going to print out the lines from what is the range. You can see that what is the range of the day to day expected. Look at how amazingly it predicted the whole range for the day. When the market opened to right here, market opened right here 8:30, it predicted the day's range, and also it tell you when the price breaks out of this range where it can go as a target. This BSG levels is the predictive algorithm. That means when you open the chart and attached indicator, when the market opens, already it's going to predict in terms of what is the date range is going to be, what is the target you're going to expect. And the third most important part is these gray areas. When you can look at the past using supply and demand zone, but for the future, based on where you can expect the future supply and demand, these are gray zones. I don't want to confuse you now, but I use it extensively to see the current supply and demand based on supply and demand indicator, and also use the levels to see what is the prediction. Okay, where the next support is going to be, where is the next demand is going to be, what is the days range, where it's going, everything is based on base level. That's why those two indicator, even though both are supply and demand based, but one is real time, other one is like a predictive, what's going to happen next. That's why both are very important in the strategy for me. Okay, let's move on to a little bit on the next strategy to before I run out of time. Okay, next one. So we talked about this particular supply and demand have a consolidation region. It knows a clear boundary, the top and bottom boundary. I told you there is so many ways you can trade supply and demand. We don't have to wait for the breakout. What if the day is all day choppy? Uh, who can tell me how we can trade the same consolidation range on a choppy day or like any other way? For that, I need to show you the behavior again, because if you look at if you look at the if you look at this particular chart right here, the boundaries are very powerful in terms of anytime the market stays in this particular range, until the price comes back in. Once I see the bounce on the bottom boundary or the bounce on the top boundary, I can take the scalping trade. Okay, so in this case, that's why in terms of sometimes you don't need to, let's say there's no breakout, market is all day staying within the range, doesn't mean you don't have to trade. That doesn't mean you're not trading the whole day. You look for the scalping opportunities. How? You know what is the top boundary supply, you know what a bottom boundary demand. That means anytime you can see the bounce, okay? Anytime you can see the bounce, you can take the trade. From the demand bounce, take a long. Look at this in terms of demand bounce. That means you need to wait till the green bars becomes sorry, red bars becomes green. Wait for the bounce. Wait for the bounce. You have scalping opportunity. Let's say it took the bounce, market went back and stopped out. The fascinating point is it knows exactly tell you when to get out of the trade. The risk is minimalized. That let's say you enter the you're entering right here, okay, on the bounce. When the market moves down below this demand, you know exactly. That means now it's a breakout. That means I'm going to exit my trade. Not only it's going to tell you you can enter the trade, also clear time when you need to give up on your trade. That's why in terms of when the market is in consolidation range, you don't have to wait till the market breaks out, wait for the supply becomes demand. That's a very powerful trade. If that's one trade, you will have much more success. But the second opportunity is even during this particular consolidation, you can always enter on the bounce because the market is going to bounce between those regions again and again. Okay, here's one more way I use the scalping. I know the market is moving most likely up towards the momentum. In that case, instead of waiting here, I pick my direction. Okay, the market I based on the higher time frames, everything market is going up. Market is going up, but currently market is consolidations. Two things. I know the market is moving towards upside, but current market is on the consolidation. That means I don't if even though I see the bounce on the supply side, I won't take it. Why? Because market I know it's on the upside. That means I see anytime the market bounces on the demand side, I'm going to take the long here. Here is the reason why. You know the market is upside. If you take the long here, you don't have to exit here. You can take once the demand breaks out, you move your stop loss from here to here. Now you are in the same trade, in the breakout trade. Did I confuse you guys? Are you able to understand what I'm trying to say in terms of the in the consolidation? Don't pick random. Don't take a bounce on here, bounce on here. You need to know which side you're going to trade on. In this case, if let's say you saw the movement up here, that means market is still going to go up. That means even though market is bouncing here, I won't take the short here, but I will wait for bounce from the demand so that I can take a long. That means not only I can take this particular price movement, also the breakout. Also the breakout. Okay, that's why. Not sorry, I went all the way back. Okay, find the consolidation range, find the trend in the higher time frame, stick to the direction, enter on the bounces. Same rule applies. Use the stop loss level, trade management, and everything. Okay, so if you go back to the charting again, I have two charts. Like I mentioned, the one chart I have the time-based chart where I have supply and demand, where I can see the higher time frame. What does that look like? And then I want to show you this particular indicator without supply and demand to show how powerful is this one. Okay, so I'm going to remove the supply and demand to show you. Order flow zones is going to tell me in terms of on the time-based chart, even though the market, it hides the market movements, it shows me the order flow based momentum, which side the momentum is. This is what I'm telling in terms of by looking at the order flow zones. Okay, market is towards the down. I see all red bars because order flow zones is going to color code the bar based on momentum. So once I see the on a higher time frame 5-minute chart, when you say like all reds in this case, that means okay, my direction is down today. My direction is down until I start seeing the blue bars. Okay, my direction is down on a higher time frame. Okay, this is why you need to understand the time in terms of the look at the 5-minute chart also to make sure which side you're going to trade. Now you know by looking at the order flow zones. Sorry. By looking at order flow zones, I know which direction I need to trade. Now go back to the trading chart. Now go back to the trading chart in terms of what day was that? I think it was Friday. Let's go back to Friday. Okay, now it's loading up. So now on the higher time frame on 5-minute chart, based on order flow zones, I know which direction I need to trade. Even though I know it's the consolidation range, on a higher time frame on 5-minute chart, order flow zones tell me all the red bars. That means it's going to clearly tell me it's a downside down. That means even though the price is bouncing on the demand zone, so first time, second time, I will not take the scalp here. But look at this. When the price bounces on here, I can take the short trade. That means on a higher time frame, my order flow zones says it is downside momentum currently at present. That means the beauty is that since I don't need to wait for the breakout to enter the trade here and then exit here, now I'm able to enter the trade here. Okay, you enter the trade here, still take the same target. That's why you need to look at the time frame also, high time frame also, look at the order flow zones, pick the direction, and then scalp only on the direction. So I'm going to stop with these only 2 strategies. There are more ways. I can have another webinar or something, but I want you guys to start with these 2 strategies where you can use the breakout, where the supply becomes demand, demand becomes supply. And once you master that particular strategy, then you can add the scalping strategy, right? Scalping strategy using order flow zones, find the direction, and wait for the consolidation, know which side to enter, and then go from there. Okay, so hopefully I was able to explain what are best way possible here. If you have any questions now, ask me, or if you have questions later, please email us info@buysideglobal.com. Okay. Again, my chart setups are like on a pro bars chart. I take away the time, look at the only purely price action to see the consolidation and breakout. I have the BSG levels to see the prediction where the market future supply demands look like. Supply and demand indicator only pro bars, supply and demand BSG levels. On the 5-minute chart, I have order flow zones and supply and demand alone. The reason order flow zone is going to tell me in terms of which direction momentum based on order flow. This way I can know which side I need to stay on the trade. Okay, that way 2 charts are very critical for me. Okay, so somebody's, yeah, if you want anything in terms of if you once you get the subscription, I think I will be able to. Somebody's asking, can you give me the chart templates that I'm using? Yes, I'm happy to share me chart templates, work-based templates for ES. If you guys are trading in other instruments, I can also help you on those things. Before I go, I wanted to show you one of the most powerful reason why this strategy is most important for you to learn. The reason is I not only use the strategy on a day trading, I have a retirement account, which I don't want you to play around until you figure it out. Where I use a strategy for a swing trades, longer time period holdings, because the book that I showed you, the guy who made the $2 million on one strategy alone, he uses long-term holding. In terms of even the stocks behave the same way. It consolidates, stays in the price range for a long time. You know, by using supplements, our same indicators. If you look through the stocks or anything, is going to give you the same opportunities. I think I have a chart right here. Let me see if I'm able to show the chart. Okay, so I think it's here. Can you guys see it? This is the chart. It is a daily chart. It is not a day trading chart. I want to show you how powerful this strategy is. Not only for your day trading, your swing trading, or your investment account. Okay, that's why I want to show you. This is like the daily chart for a ES, looking at for 1 year. In this case, you can see in terms of market. In this case, I think if you look at right here, you guys see this one in terms of the opportunities where you can, if you're same kind of strategy, how we can use it in the the stocks, anything. Oh, sorry, here. one, okay, and then another one. In terms of those are breakouts, you can clearly look at the breakouts. I didn't plot this on pro bars. If it is plotted on pro bars, that will be even more clarity to trade. I should have plotted it in there. Anyway, so this strategy not only works for your day trading, it also works for swing trading. Doesn't really matter. The book that I read, that guy uses the same strategy for holding the stocks for days or weeks for long term on the breakouts. Somebody's asking what is the book that I mentioned. I'll go back to that slide in a second to show you what is the book that you guys should read. That he talks about the same strategy for stocks. Actually, he use this strategy for stocks, how he looks for the consolidation, how he look for the supply on top, demand on the bottom, how he looks for the breakout. He does it there, but it amazes me how the same strategy, how people use it differently, and then still it's successful, but still it's very much effective even today, since this book was written in 1960. Okay, I think I'm close to the end of the session. Let me go back to the slides again. How many of you think it's helpful to see a presentation today was helpful on what I covered today? So is there something you guys are interested to? Okay, before I go, I want to show somebody asking what is the book name. So I wanted to go back to that book. Oh, here. Okay, this is the trader Nicholas Davis strategy back in there. How I made $2 million in stock market. The book was like $5.95 or $6 a paperback, but it's an excellent book. It talks about the strategy in detail for stocks, what he looks, how he trades, and also you can see his performance stats, how much he made, and what every single way he put together an amazing way possible. Okay. All right. So Victor, I wanted to continue before time runs out. Okay. So again, BSG levels is a predictive algorithm. This is very much important. When I'm middle of the day, I know how the supply and demand formed until that point, but I also wanted to have the predictive what is the future prediction is look like based on our algorithms. So BSG levels is going to give you that most. Now I won't say like I don't want to talk about win rates, but this guy have a better prediction than any system. Even in this case, you can look at here. This is the day range it predicted. Look at how market stayed in that range. Also, the pink line that indicates it's a target. It's a daily target. Look at the price went to the target exactly on the target that prediction our algorithm predicted. So this is exactly why. And then these green and the gray lines are the where you expect the support and resistance future. You can see in here, it predicted those lines by 8:30. Okay, 8:30 it predicted market was here. Market was here. 8:30 it started printing this zone. Look at the market consolidated right in there, came up here. When the price broke out here, it predicted the supply here. Look at how the price stayed in that region. More and more you use it, more and more you'll see how to use it effectively. That's why in terms of the day trading, the strategies, all it's not something, oh, I'm going to start today, I'm going to make money tomorrow. It's not like that. Practice on a sim account, or just look at your charts. Look at only one thing. What is the behavior repeating again and again? Once you start happening again, start anticipating what is the top boundary, what is the bottom boundary, when is the breakout. Start looking at visually. Once you're ready to start trading, trade on a sim account. Start on a sim account for some time until you become profitable on sim. Okay, until you're not profitable in sim, don't come out of it. Stay in sim. Once you're profitable in sim, then do micros. It works for crude, ES, NQ, micros, minis, anything. This strategy works for every single instrument. Okay, so again, let's move on. Obviously, I'll keep on talking because I get excited about the strategy. Okay, again, BSC order flows is the one that is going to tell me when the bar moves up, it's a green bar, but this particular indicator hides all the green and red bars, gives me the clear direction where I should be trading with. That's why out of the zones on a higher time frame is important for me to know which direction I should be trading, which direction I should be entering. That's why on a 5 time frame, 5 minute or 10 minute, I have supply and demand and order flow. On the pro bars where it's price based chart, I have the supply and demand and then the BSD levels. That's why those combinations works together for me. Okay. Um, you can buy each indicator if you want by itself alone, supply and demand indicator or the pro bar chart or BSG levels or order flow zones in our website. 495 per indicator per year, it's already there. Okay, but the strategy we talked about, you need all those four, right? You need all four indicators together to use it as a strategy. So once one indicator or one chart type is not going to help you much. You need everything together to execute the strategy. So that's why not everybody can put down $2,000 to get started today. That's why we wanted to find a way. Okay, we want to get access to all the indicators together so that you can get started on the same strategy. At the same time, is most of the time some traders can't put down $2,000 on the first time. Okay, that's why we came back with the plan in terms of monthly subscription. You can start with just monthly subscription. First month $399 down first for the first month, and then it's a $139 in renewal. You're going to get all four indicators. You can always need any help, I'll be happy to jump into the call, walk through in your screen, in your chat to tell you to what are the instruments you want to trade. I can help you with my any personal help that I can have. Not only that, today we wanted to give you like it's actually $100 off. Forget the math over there. It's $100 off to $299. You can just $299 down, and then you can get the all four indicators together to start with the strategy right away. But take a screenshot. You need to get this on this URL. Okay, BSG sub www.buysideglobal.com/supply demand. You can't find this the product link on the website. It's not there. Take a screenshot. Why? Because you have the link where you can buy. You can't buy it on the website. Also, you have the discount code. The discount code is supply. Go to buysideglobal.com/supply demand, where you will see the price $399 for a first month, $139 per monthly subscription for all four indicators together. But supply is discount code that you can use it for today and tomorrow to get $100 off, so that you can get to $299. Once you get there, again, like I mentioned, stick to the analyzing it, get used to it, and then if you need any help in terms of if you have any questions, reach us at info@buysideglobal.com. Email is right here. During business hours, you can always call me at 435-659-8581. We're happy to help you in any way possible. I think I am done for the day, unless you guys have any questions that I can help you with today. Any feedback? What do you guys think about the strategy? It's something that you want to try? Something? All right, that's good. Thank you. What else you'll say? Thank you so much. Perfect. That's all for today. I think thank you for joining on a Sunday. I know it's a family day, but thank you for joining us on a Sunday